public television. It's a tradition my family loves. I worry about the children. After I'm gone, who will help guide them? That's why I'm entrusting my legacy now with a charitable gift annuity. The best part is that every few months I receive a check back from public television for the rest of my life. That means peace of mind.
Business partners, Freightliner Group and R.B. Coons & Associates, Inc. have made a contribution to the Program Fund for Excellence. Additional funding has been provided by you, the contributing members of OPB.
Born a slave, then set free, she finds the struggle has just begun. Her fight for freedom echoes the story of millions. The autobiography of Miss Jane Pittman.
Thursday night at 9, here on OPB.
Explore Oregon with Lewis and Clark at opb.org/Lewis and Clark.
Funding for local broadcast of Nightly Business Report has been provided by viewers like you and by the following. The Collins Foundation. The Collins Foundation is dedicated to improving the quality of life in Oregon.
The blue chips run into the red, falling more than 123 points on continuing concerns about inflation. Not a great start for the fourth quarter on Wall Street. The Dow is now down more than 250 points in just the first 3 days of trading.
Shares of General Motors contribute to the market slide. GM takes a hit on news that it's dumping its stake in a Japanese car maker and will have to restate its second quarter financials as a result.
There's a brokerage battle brewing in cyberspace, and Ameritrade is one of the combatants. We'll talk with its CEO, Joe Moglia, about the bigger is better trend in the industry that it's now seeing, and with a slew of mergers.
Then you might want to pocket your plastic. Credit card interest rates and required minimum payments are about to head higher. In the Money File tonight, some things to consider before you put off paying that bill.
I'm Paul Kangas.
And I'm Susie Garoff. This is Nightly Business Report for Wednesday, October 5th.
Nightly Business Report is made possible by
Don't let your nest egg get away from you. Objective financial advice can help. A.G. Edwards, for 118 years, fully invested in our clients.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective. This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. A big sell-off on Wall Street today on worries about inflation and higher interest rates. The Dow tumbled 123 points and the Nasdaq lost 36. Weighing on the markets, comments by Federal Reserve officials that inflation is now the biggest threat to the economy because of Hurricanes Katrina and Rita. Also fanning the inflation flames, a report showing a sharp slowdown in the service sector. The Institute of Supply Management's non-manufacturing index fell sharply in September. 53.3% last month, down from August's reading of 65%. The ISM's index of prices paid in September rose to 81.4%, up more than 14 points from August. Now, that's its highest level ever and the biggest surge in the report's 8-year history. Higher energy costs were to blame in both cases. Meanwhile, energy prices fell sharply in New York trading today, despite a report showing a big drop in oil and gas inventories. November crude futures fell $1.11 to $62.79 a barrel, and November gasoline futures tumbled more than 5%. U.S. oil supplies fell by 300,000 barrels last week, and gasoline inventories shrank by more than 4 million barrels. But traders were actually relieved that the declines weren't steeper. They say getting crippled production back online quickly will determine where prices head from here.
If we can get some more of these refining the refining capability and capacity up to levels where they were prior to the hurricanes, then obviously I think the market will definitely correct itself. And if we do have a mild winter, that's another thing too. We'll look at weather heading into the winter season. If we do have a mild winter or a non-event as far as winter is concerned, this market could be much lower.
But traders are not as optimistic about natural gas prices, which remain near all-time highs. On the worry list there, uncertainty about when damaged Gulf Coast pipelines will be repaired and fears that a harsh winter could lead to shortages.
The pension plan of another American company, Huffy Corporation, was taken over today by the federal agency that guarantees the plans. The Pension Benefit Guarantee Corporation says Huffy can only fund about 47% of its plan, which covers 3,700 employees and retirees. So the agency will be liable for the rest, which amounts to roughly $80 million. Huffy makes bicycles and filed for Chapter 11 last October. It hopes to emerge from bankruptcy later this month after getting funding from Chinese investors. That takeover of Huffy's obligations comes as legislation is moving through Congress to overhaul the rules governing private pension plans. The Senate is set to vote on legislation this week that would clean up pension accounting and force companies to fully fund their pension promises. Washington Bureau Chief Darren Gersh reports.
There are two basic issues to the pension debate on Capitol Hill. One, how to estimate the financial hold in a corporate pension, and two, how fast to fill that hole. Some analysts say valuing plans is not that hard.
Pension plans should be valued on real dollars and real asset values today. What they're doing right now is they're taking fantasy accounting, but unfortunately they have to pay real dollars for the benefits.
Since pension plans run for decades, big companies and unions argue marking assets to current market prices makes no sense. Industry lobbyists say the most reliable way to measure pension liabilities and assets is to use an average of stock market returns and interest rates over many years.
Given what happens with the stock market, given what happens with interest rates, to be able to have to pick a snapshot point in time is a very volatile way of addressing a long-term obligation.
The Senate is considering legislation this week that would smooth pension returns using an average return on assets over a 12-month period. Legislation in the House of Representatives would use a weighted average over 3 years. Both bills give companies 7 years to bring their plans up to full funding. The Senate bill would also raise corporate premiums for federal pension insurance by more than $3 billion. But the pension problem is growing worse with each new corporate collapse. Delphi is reported to be considering a bankruptcy filing this week. The federal government says the auto parts maker's pension is short by $11 billion. Experts say the legislation now pending on Capitol Hill will not solve the nation's pension underfunding.
It really does require a delicate balancing. On the one hand, we need to make sure that a promise made is a promise kept, and therefore that plans are funded responsibly and promptly. On the other hand, we need to make sure that employers still want to maintain these plans.
While Congress is expected to force companies to bring their pension plans up to full funding more quickly, there is one large exception. The Senate is considering giving the troubled airline industry up to 21 years to fully fund its pension promises. Darren Gersh, Nightly Business Report, Washington.
Stocks headed broadly lower this morning amid growing concerns about inflation and higher energy prices. That steep decline we told you about on the service sector index worsened the sell-off. At noon, the Dow was off 70 points, NASDAQ down 26. The market's bearish behavior convinced a lot of investors to take profits in favorites like housing, biotech, and energy stocks, and that spurred a major afternoon sell-off. The Dow Industrial Average came in with a loss of 123 3/4 points at 10,317.36. NASDAQ Composite tumbled 36 1/3 points, ending at 2103.02. Standard & Poor's 500 lost 18 points, closing at 1196.39. Over in the bond market, the 10-year note rose 7/30 seconds to 99 7/30 seconds, lowering the yield to 4.35%.
There's been a flurry of mega deals in the online brokerage business. E-Trade agreed last week to buy Brownco, and Ameritrade recently closed on a deal with TD Waterhouse. Joining us now to talk about the changing dynamics of the industry, Joe Moglia, CEO of Ameritrade. And nice to see you again, Mr. Moglia.
Hi, Susie. Nice to see you.
Well, what was your reaction to the E-Trade purchase of Brownco? What impact will that have on Ameritrade?
Well, I think you should expect continued consolidation in the industry. There is excess capacity. So as long as that exists, mergers and acquisitions wind up making a lot of sense. In terms of the actual impact that it's going to have on Ameritrade, it's really not going to impact us. Our strategy is intact. We know what we want to do, and we'll pursue that. So the Brown E-Trade acquisition or deal really doesn't affect us at all.
Were you interested in Brownco yourself for Ameritrade?
Susie, that's a very fair question, but for legal reasons, I'm not allowed to comment on that. But I think it's fair to assume that anytime we see a property that winds up making sense to us from a strategic perspective with regards to our clients or our shareholders, it would be something that we would be looking at. But I can't specifically comment on the Brown acquisition.
One of the big questions in the investment community is it just a matter of time where E-Trade and Ameritrade will merge together? And I know that E-Trade made a pass at Ameritrade this past summer and it didn't work out, but do you see that in your future?
Right now you have about 80 firms or so that have online brokerage presences in the United States and about 5 or 6 fairly major names. As long as there's excess capacity, I do believe that consolidation will continue. I don't think you're going to see 5 major names 3 to 5 years from now. Now, whether or not we wind up doing something with E-Trade or we wind up doing something someplace else, we don't know that. But at the end of the day, we're going to do everything we can to make decisions that are going to be in our shareholders' best long-term interest.
Well, Mr. Moglia, as you position Ameritrade to compete with a bigger E-Trade and also with Fidelity and Schwab, because these are the really big players, what is your strategy?
Well, first of all, part of what we were able to accomplish, Susie, by doing the TD Waterhouse transaction, it expanded our client segmentation strategy and got us involved with the long-term investor space as well as the advisory space. We were already pretty significant in the active trader space, and it just enhanced our position there. It gives us, in effect, diversification of our revenues. We have a full scale of branches, a branch network now across the entire country, and we're the number 3 player in the advisory business in the United States. Above and beyond that, we've also created a strategic relationship with TD Bank that allows us the vast majority of the benefits from being associated with a bank without the majority of the cost or the risk associated with that. So that has been our strategy, and we'll continue to pursue that.
And what about the competitive marketplace, especially in terms of pricing? We've seen Schwab drastically reduce its prices. It's been very aggressive on that. Do you expect more price competition between the online brokers?
Well, Susie, there's always going to be price competition on Wall Street in general. Now, when Schwab came down with a lot of their pricing, if you notice, they were taking a lot of the prices that were frankly above the market and basically bringing them more in line with what the market's going to be, with where the market is. I think for us, it's a question of value proposition. It's a matter of having a specific price for different types, for a different suite of products and services that you indeed offer your client base. And you can have different levels of prices for different types of clients depending on what you offer them. So that's going to continue to be part of, I think, the normal course of business.
All right. Well, thank you very much for coming on our program again. We appreciate it.
Thanks, Susie.
We've been speaking with Joe Moglia, CEO of Ameritrade.
Investors looking for big stock market returns may want to send their money packing. Many emerging markets are outshining the United States so far this year. So where are the best opportunities? Erica Miller got some answers from the pros.
Many investors are fed up with the performance of U.S. stocks. The Standard & Poor's 500, a proxy for the U.S. market, has eked out only a fractional gain so far this year. By contrast, some emerging markets have scored spectacular returns. The Egyptian stock market is up 126%. Argentina, Jordan, Sri Lanka, and Russia are each up at least 68%. In fact, of the 27 emerging markets tracked by Morgan Stanley Capital International, only 2 have done worse than the U.S. this year, Venezuela and Taiwan. So why has the U.S. market been such a laggard?
I think we are a little bit later in the economic recovery cycle. Interest rates have been moving up. The Fed has been raising rates to try and take some of the stimulus out of the system. And that's historically been a sign that equities aren't going to do quite as well.
Another reason investors are sending their money to emerging markets is strong global demand for commodities like oil. Plus, many developing nations have radically transformed their economies over the past few years.
They're paying down debt, they're pre-financing, they're embarking on liability management, they're improving the fiscal surpluses, and also building up foreign exchange reserves.
So can the strong performance of emerging markets continue? Some strategists say yes and see good opportunities in places like Thailand and South Korea.
Asia has fundamental growth. We see industrialization. We see some of the manufacturing jobs obviously moving from the developed markets into those markets because of cheap labor. But we also see rising productivity. The restructuring and reform in the financial areas in particular is very good for capital and for equity markets.
Others prefer Latin American countries, including Argentina, Brazil, and Mexico.
Returns are still very high. The structural improvements are in place. And in Latin America, the commodities boom really is helping as well.
One word of warning, emerging markets are almost always more volatile than the U.S. market. But advocates say along with the greater risk can be greater reward. Erica Miller, Nightly Business Report, New York.
A newspaper in Poland reported today that U.S. computer company Dell is planning to open an assembly plant near the Polish city of Lodz. The paper said the investment will be worth $143 million and employ 3,000 people. But Dell says while it's in talks with Polish officials, it has made no decisions on the location of a plant. Meanwhile, this is the location of Dell's newest plant, Winston-Salem, North Carolina. Dell's newest and largest manufacturing site opened for business today. The 750,000 square foot plant will build Dell's Optiplex and Dimension desktop systems, shipping to customers in the eastern United States. This plant will eventually have 1,500 employees. And Paul Dell says its job rosters in the U.S. have grown more than 20% in the past 3 years.
Well, the stock didn't grow today at all, Susie. In fact, it lost some ground, and we'll see it in a moment as we take a look at our stocks in the news tonight. For the third straight session, Lucent Technologies topped the active list today on 29 million shares. Stock losing 16 cents. ExxonMobil down $1.60 in a weak energy group as oil prices faded a bit. Delphi was down 28 cents. Analysts say the company's close to filing Chapter 11 bankruptcy unless General Motors bails them out. Texas Instruments down another 62 cents after losing $1.87 yesterday when Goldman Sachs downgraded it from inline to underperform. Pfizer in there with a 44-cent loss, fifth in big board volume. GE fell 17 cents. Motorola 32-cent drop. Procter & Gamble fell 97 cents. Hewlett-Packard lost $1.08, and Chesapeake Energy in that weak energy group down $2.12. General Motors itself off $1.44. The company is selling its entire 20% stake in Fuji Heavy Industries. That's the maker of Subaru cars. Toyota is going to buy 9% of Fuji for about $310 million. Harley-Davidson losing $2.92. Bank America downgraded it from neutral to sell and cut its price target down to $36 a share on concerns about rising retail inventory for Harley and slowing demand for its products. British Airways up $1.22. The company's September traffic was up a respectable 7.8% over last year. Valero Energy down $6.79. Declining demand for gasoline because of the high prices had a lot of the major refiners' stocks under selling pressure. Valero one of them. Let's have a look at some others. Tesoro off over $5. Sunoco fell $3.84, and Marathon Oil losing $3.79. OM Group, this is a specialty chemicals firm, down $3.60 a share. The company cut its 2005 earnings forecast from the $2 to $2.40 a share range all the way down to $1.40 to $1.60 a share. Wolverine Worldwide, maker of Hush Puppy shoes, among other things, third quarter earnings higher, 42 cents up from last year's 37 cents. Revenues were up 7%, and the company boosted its 2005 estimate up to $1.26 to $1.28. Freddie Mac gained $1.46. The company's board of directors approved a $2 billion common stock buyback, also $2 billion preferred stock buyback. Yum Brands edging up 56 cents. Third quarter earnings comfortably higher, 72 cents up from 61 last year. Revenues rose 3%. And then Wendy's gaining 61 cents, although the company said the two hurricanes will cut its third quarter earnings by 2 cents a share and sales will be down 5% over last year. Google topped the NASDAQ most active list, down 29 cents, followed by Microsoft, 31-cent drop there. Apple Computer off 97 cents. Intel fell 43 cents, and Dell, you heard the story there, down 80 cents. That was fifth in dollar volume. And no green at all on the active 10 in the NASDAQ. Cisco down 17 cents, SanDisk fell 34 cents, Qualcomm 46-cent drop, eBay lost a penny, and 10th in NASDAQ volume was Amgen, off $2.09 a share. Human Genome Sciences losing $4.10, or about 30% of its value. Mid-stage trials of the company's lupus treatment proved to be disappointing. And ADT Telecommunications down $3.06. Company cut its fourth quarter guidance from 28 cents, that's the street estimate, down to 15 to 19 cents a share. And Mercury Interactive losing $5.29. The company says it won't meet its third quarter earnings targets. It's also, of course, under an SEC investigation regarding its accounting practices. And those are the stocks in the news tonight. Susie?
Paul, when it absolutely, positively has to be there overnight, you might have to pay more for it. FedEx said today it's raising rates for many of its services starting January 2nd. It's also cutting its current fuel surcharge. But when you net out the two, shipping prices will average about 3.5% higher. The package delivery company says the extra money will go to fund upgrades in its automated systems, for additional flights, and for general operating costs. Analysts weren't particularly surprised by FedEx's move. Last month, rival UPS said it was hiking rates and doing it through a higher fuel surcharge.
Tomorrow, there's good news and bad news about the growing value of your home.
Here's a look at what's happening tomorrow. Weekly jobless claims and September chain store sales come out. Also tomorrow, earnings from Accenture Limited, Constellation Brands, Costco, and Marriott International. In the Money File tonight, beware, the minimum payment on your credit card may be going up. Here's Chuck Jaffe, senior columnist at Market Watch.
The number of Americans who are delinquent on their credit card bills now stands at an all-time high, with nearly 5% of all credit accounts past due. That statistic from the American Bankers Association is frightening, but it's about to get much worse. You can blame the sluggish economy and the shocking increases in gas prices for the increase in delinquencies, which are defined as accounts more than 30 days past due. But delinquency numbers will rise because new federal rules are forcing many card issuers to hike the minimum payment due on credit cards. In some cases, minimum payments will double. The rule goes into effect in January, although some credit issuers have already made the change. With minimums rising, delinquencies will too. Now, studies indicate that as many as 10% of consumers pay only the current monthly minimum due. If you're one of those people, the key is to be ready for the rule change, to understand that minimums are rising, and that it is crucial not only to meet them, but to do it on time. Lenders increasingly are feeling the pinch of the economy too. They'll use late payments as an excuse to raise your rates. Heck, if you're late on a payment to one issuer, the others may use that as a reason to bump your rates on their cards. Time will tell if the rule achieves its goal, which is helping Americans as a whole make progress towards debt reduction. But the key for consumers is to remember that no matter how bad the delinquency numbers are today, you don't want to become a statistic tomorrow. I'm Chuck Jaffe.
Recapping today's market action, another big slide for the blue chips. The Dow lost 123 points, NASDAQ Composite down 36 points. To learn more about the stories in tonight's broadcast, go to nbr.com.
And finally tonight, if you're among the millions of Americans who just can't seem to save any money, this might be an interesting idea. Bank of America rolled out today a new program called Keep the Change, and it's for debit card users. The bank will automatically round up to the nearest dollar amount spent, then transfer that difference from a customer's checking account into a savings account. The bank will also match 100% of the Keep the Change transfers for the first 3 months, and then after that, it'll match 5% a year up to $250. And I guess, Paul, it's a new twist on the old saying that a penny saved is a penny earned, because in this case, with the match, you save more than each penny.
Yeah, it's sort of like an electronic piggy bank.
That's a nice way of thinking about it. That's Nightly Business Report for Wednesday, October 5th. I'm Susie Garoff. Have a good evening, everyone, and to you too, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is made possible by Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments. Gain from our perspective.
Don't let your nest egg get away from you. Objective financial advice can help. A.G. Edwards, for 118 years, fully invested in our clients.
This program was made possible by contributions to your PBS station from viewers like you. Thank you. For more information about investing, you may order Nightly Business Report's home video, the NBR Guide to Stock Market Strategies, by calling 1-800-535-5864. This program is available in either the VHS or DVD formats.
We are PBS.
Funding for local broadcast of Nightly Business Report has been provided by viewers like you and